I'm Jonathan Pearl, Head of Originations for Lord Abbett's private credit platform. Interesting question, especially in today's markets. We see really nice tailwinds across a few dimensions. One, on the supply side, we see really expanded investor demand from a few different investor types. So if you look at what's going on in retail and high net worth markets, those investors tend to be underallocated to private investment asset classes and are gaining assets through new investment vehicles. I work in private credit, so investors in retail and high net worth have more options today than they had before. Things like private BDCs in addition to public BDCs and other vehicles. On the institutional side, again, we see nice growth. I'd call out insurance companies as having growing interest in areas like private credit. And I think the private investment industry has done a really nice job structuring and tailoring investment vehicles for the particular needs of different investor classes. Really, if you take what's happening in today's market where you have heightened volatility, we see a few opportunities. One, if you look at what's happening in private and public markets, there's been a lot of convergence where companies are choosing between liquid and private options, especially at the upper end of the market. And so, today where you have more volatility, public markets tend to shut down in these types of environments. And so we see an opportunity, especially given our platform and the research that we have covering 2,500 liquid issuers. We see opportunities to help liquid borrowers that may not have access to the capital markets access private capital. We also see opportunity in the core middle market, which is where we spend most of our time. That part of the market tends to be more stable. I would argue that today's market volatility may have a muting impact on M&A volumes over the next few quarters. But the core middle market always stays reasonably active. And we've also seen a number of direct lenders continue to gravitate up market. And as a lender that's dedicated, for the most part to the core middle market, we see a lot of white space opening up for our capital.